Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a great green day in the market. You know I always wish the best for my viewers and subscribers. And speaking of subscribers, we're getting really close to 500 here, which is crazy. So everybody, subscribing and commenting and stuff really does help the channel. Hitting the like button, all that support is phenomenal. I never thought I'd have 400 subscribers and nearly 500 is crazy to me. So thank you so much for the support, guys. So we're going to go over the first we're going to go over the overall portfolio, of course, the performance, then the individual stocks, my buying power, and what I plan on going after with that $500, and then my watch list. So today we're up about $120. For the week, we're up $605. For the month, we're down $370. 3-month mark, we're up $2,800. For the year, we are up $1,000, and all time, we're up $3,500, up 17% since April 13th of 2018. I do have $500 of buying power because I sold out of Lowe's and I sold out of PBCT. Haven't bought anything yet. I am getting a dividend at some point tonight. Altria should be paying me, and that will add another $130, so should have about $680 to deploy into the stock market, which is great. It's been a while since I had free cash like that, in that amount anyway. So the reason I sold out was because they were overvalued positions, and I can get better dividend income elsewhere. So the money was kind of locked in Lowe's, and I do love the company. I think it's a phenomenally run company. Love the management, love the dividend increases, love the history. It's a dividend king. I can't really complain about that, just like with Target. But again, just like with Target, it was overvalued. So I was up $65 a share. I wasn't comfortable buying at those levels, so my money was stuck there. So I wanted to reposition or allocate that money. Same with PBCT. So as of right now, I have $552 in buying power. I'll have about $580 some dollars after tomorrow because I'll get paid that Altria dividend, and then I will be purchasing shares before I leave for work tomorrow. So starting with one of my personal favorites, Realty Income, 16 shares. $932 of market value. Average cost is $46.31. 4% of the portfolio is in Realty Income. Down $24 today. Up almost up $191, up 25%. A dividend coming in on the 15th of $3.75. Then FRT, a dividend king, which plays into my real estate focus this year, focused on insurance first and then real estate. So Federal Realty will be being added to, especially at these levels. We have $82.58 for market value. Average cost is $113.40. 0.35% of the portfolio is in FRT. Down $1.95 today. Total down $30.82, down 27%. A dividend coming in on the 15th of $1.06. Again, this is a quality dividend king, which is the only REIT that has a dividend king status. So I'm wanting to buy heavily on it. Will be one of my favorite investments for this set of months. Then we have Coca-Cola. We have 21 shares of this king, a little over $1,000 of market value. Average cost is $51.39. 4.5% of the portfolio is in Coca-Cola, down $18 today, down 24 total, down 2.31%. The reason that it's not paying me this month is it pays 4, 7, 10, 12, so it actually paid me in December. That's the only reason why I like Pepsi a little bit better, because it has the same payout dates that I'm accustomed to. Coca-Cola is a little different, but I do like Coca-Cola, like the actual beverage, more than I like Pepsi. But I like Pepsi as a business better, so I will be adding to Pepsi throughout this year as well. Then we have Altria, my biggest position for this set of months. 151 shares, $6,200 of market value. Average cost is $43.59. 26% of the portfolio is in Altria, up $34 today. Down $34 today, down $3.36, total down 5.1%. And a dividend coming in today at some point of about $130. So the only issue I see with this position is it's way too much of the portfolio. That will be going down. As I said, I will be adding Pepsi, and I have another insurance company that I'm going to be buying for this set of months as well. And of course, I will be buying some FRT. So this set of months will not be as heavily dependent on Altria, and that's really what my focus is going to be this year as an overall investor for 2021. Is I have no issue with the positions that I have. I have an issue with the allocation, which of course we've talked about this in other videos as well. I don't want to be overexposed to a certain industry or to a certain company, and I definitely am in about 4 companies, being Altria, AT&T, AbbVie, and ExxonMobil. But those were the ones that were down the most the past year, so it makes sense that those are my biggest positions, but I want to change that and focus on allocating capital to better quality companies. And I do think the insurance business is way better quality than, say, Altria or ExxonMobil, but that doesn't mean that I dislike those companies. I just want to allocate uh, more money to companies that I'm more comfortable with and feel more bullish on now than I did before, because I didn't understand the insurance industry before. Next, we have AT&T. This is one of my foundational stocks. 126 shares, $3,600 of market value. Average cost is $29.68. 15.5% of the portfolio is in AT&T. Down $22 today. Total down 105, down 2.83%. Love AT&T. Love the valuation right now. I know they froze their dividend. They haven't increased it, so I don't think they're going to lose their aristocrat status unless they don't increase it at all this year, but I'm pretty sure that they will. I like what they're doing with their business. I think it's important to freeze the dividend to allocate more towards either HBO Max or getting DirecTV sold, and then using that money from the sale of DirecTV to cost down their debt, because their balance on debt's crazy big right now. It has been for a while since that Warner merger, which is why I wanted to buy AT&T in the first place, because I wanted to own Warner. So buying AT&T at these suppressed levels is like getting Warner assets for free. So it's been like that for a while, in my opinion. So I love AT&T. It's a big position for me, about 15% of the portfolio. So this is one of those that I'm comfortable with it being about 10%, but I know I'm going to have more capital allocated to other positions, but I am comfortable with AT&T. Then we have AbbVie. We have 60 shares, $6,500 of market value. 72.22 is our average cost, which is crazy. About 28% of the portfolio is in AbbVie. This is my biggest position by market value. $105 we're up today, up $2,200 total, up 50%. So I've had some questions about why would I sell, because this is the same position kind of as a Target or a Lowe's or even a PPCT, where I've had a couple people say, that dividend guy, I know that AbbVie is in the same boat. Why are you not selling AbbVie? Well, because this provides me significant dividend income, and I love the company. So if I had like 5 shares of AbbVie, I'd probably consider selling out of it, because at this point it'd be overvalued. So it'd be the same story as, say, Target or Lowe's, because I'd have such little capital in the stock that the dividend that it paid me wouldn't really help me, and it might be better to take the money out of AbbVie and put it into something else like an AT&T, something like that. That's suppressed right now. So take the money from an overvalued position that doesn't pay me a big dividend simply because the position's not big, and reallocate that money towards something that would be a better value, a higher yield, and pay me better month over month. And help my my dividend income increase. So AbbVie's not in the same ballpark, simply because it's such a large position and the dividend is worth the money being in there. It generates enough passive income that I'm okay to let $6,000 sit in there. It doesn't make sense to me to have like $500 sit in there and make me $250 instead of like $5 to $7. See what I mean? So it's a little incremental like boost up, but it's enough that it will really help over time, especially if the dividend growth keeps up. So Aflac, this is my favorite insurance company for this set of months. We have 1 share, $44.51 is our market value. Average cost is $35.75. 0.2% of the portfolio is in Aflac, up 2 cents today, up 8.76, up 24% total. Aflac will be a gigantic position for me. Love Aflac. This is by far my favorite insurance company. And then followed by Allstate. So I will be buying a lot of Aflac. Then McDonald's, real estate play, 2 shares, $427.42 is our market value. Average cost is $115. 1.8% of the portfolio is in McDonald's, down $4.32 today, down $2.38 total. Not worried about it though. Love McDonald's. Black Hills, my utility with a great amount of upside currently. We have 2 shares, $118.90 for market value. Average cost is $60.53. 0.5% of the portfolio is in Black Hills. That will be going up. 14 cents up today, down 2.16, down 1.78% total. It's heavily undervalued right now, in my opinion. I have a $27 upside on the stock. So if I had to pick right now out of the ones that are undervalued, Black Hills will be my number 1 buy. Then we have J&J, 2 shares, $320 in market value, $135.80 is our average cost. 1.36% of the portfolio is in J&J, down about $1.80 today, up $46 total, up 17.2% on J&J. Then we have ExxonMobil. We have 86 shares of this oil giant. We have $4,000 of market value. So this, I believe, is my second biggest holding in the portfolio. 52.74 is our average cost. We're getting closer to the average cost here. Up $117, up 3%. Today on ExxonMobil and down 508.55, down 11%. But anybody that's watched the channel for a while knows I'm not losing sleep over that 11% being down. They pay me a significant dividend. They're my biggest payer for this set of months, but that will change. So currently, guys, in the portfolio, my best deals are FRT, AT&T, and actually Black Hills. So those would be the stocks that I would buy if I chose to allocate the capital to stocks within the portfolio. But I believe the stocks I'm purchasing are all outside of the portfolio. I will be buying some realty income because it is below my average cost and it's focused on real estate. So then we're going to go to the watch list, starting off with Allstate. Love them. They don't have a long dividend increase history, but they have a very good dividend increase history, double digits. The stock price hasn't done much in the past year. So I could have got in really nice at $74 during March, but that's okay. The payout ratio is great. Their dividends are phenomenal. They can triple their payout and be totally fine. So they're kind of in the same ballpark as Aflac. So I will be buying heavily. They actually pay 147.10, so this will be a good stock to have with Pepsi as well. But as I said, insurance is going to be the all focus. Like, I'm going to be really, really focused on insurance this year. So you'll see really big positions in every single insurance company that I love or have done research on that I think has upside potential for the dividend. And if they're ever at suppressed levels, I will be buying like a fiend. So Allstate is my second favorite insurance company, right behind Aflac. Then we have PepsiCo. I already talked about them when I talked about Coca-Cola. Love them, love the diversification. So I will be having a pretty decent position in PepsiCo as well. Just to kind of help offset the fact that Coca-Cola doesn't pay me, I do want PepsiCo to pay me a little bit more. So love them, and they're close to king status as well. Then General Dynamics, I wanted aerospace defense. I've had General Dynamics on the watch list before, and I was looking for quality stocks that pay in the second set of months due to the fact that I sold Lowe's and PBCT. I needed to replace that with something. One was a king, one was an aristocrat. So General Dynamics is in aristocrat status. So and it has $40 of upside plus a great $1.10 dividend per share. So after I get my dividend payment from Altria, I will be buying I think it was 3 shares of General Dynamics, and then the rest will either go to the rest will be going to Realty Income. So that way, because I would buy something like AT&T for next month, or even like Clorox, or I had Procter & Gamble, but their X dates are passed. So General Dynamics isn't, and neither is Realty Income. So if I buy 3 shares of General Dynamics at about $400, if I have $600, then I can put like $250 into Realty Income and get 4 or 5 shares of that, and then that will help me next month as well. So my dividend income will be going up decently for this next month. So General Dynamics will have 3 shares added. Then of course we have Procter & Gamble, quality dividend king, so I'm replacing Lowe's with Procter & Gamble here. We have a upside of about $10 a share, about $9 a share, so not quite the upside I look for, but if it's initiating a position, I don't really mind the price that I initiate at. Then we have Travelers, so we're on a 36912. Again, like I said, heavy in insurance. We have Allstate, we have Aflac, we have Travelers. At 137, $4 or $5 of upside, not crazy great for the upside in the stock, but I love the dividend, love the insurance business. I love the float, the concept of float, and how much these companies make in premiums and how they invest it and use that money from the investments that they accrued the interest on the investments, and then they use that to pay out their claims. So I love the insurance business model a lot, and Travelers is Travelers is great. And then next we have Prudential Financial. They're at $80 a share, about $17 of upside, a great dividend, about 5.4% yield according to Robinhood. Most of the time that's off, but they pay $1, I think it's $1.10 per share, so pay the same as General Dynamics, and they're a lot cheaper, and they're in the financial space, or in the insurance space as well. So check all my boxes off there. So I will be buying Prudential as well, but I'll be more focused on Travelers just because I like the business model a little bit better. But again, it helps my main focus of insurance. I want multiple insurance companies paying me every single month. So love that. And then, of course, we have Disney for the growth stock. Love Disney. Disney Plus is going to go to the moon. I'm super bullish on the company, have been for a long time. This one's a no-brainer for me, just a huge fan of Disney in general. And then, of course, we have the king of insurance in Berkshire Hathaway. I've been watching the Berkshire annual meetings. I'm all the way up to the year 2000. I started in 1994 on YouTube, and then I've watched like 4 hours a piece or something like that. So I'm all the way up to the year 2000, so I'm only 20 years behind. But one of the things that I've noticed thus far is you hear in the Berkshire meetings a lot about a few companies being Coca-Cola. You hear a lot about American Express, and you hear a lot about just insurance companies that he's bought throughout the years. So he talks a lot about Geico. He talks a lot about Westco, and then the last meeting that I just watched, they talked about General Re. So they're talking about all the insurance companies and subsidiaries and insurance that they have, and I really love insurance. So Berkshire is, of course, a no-brainer. Geico is one of my favorite insurance companies from the research that I've done. But the reason I'm so bullish on Berkshire Hathaway as a company is because, like I said, they have crazy exposure to Coca-Cola. They have 4 million shares. They have a bunch of bank stocks. They also have a huge holding in Apple, as well as, of course, Geico and the insurance companies. And then they have companies like Gillette that they own outright. And then they own See's Candies and Duracell and Dairy Queen. Just so many quality companies, as well as a huge space in the energy sector, a huge position in the energy sector. So just love Berkshire Hathaway overall. I really can't talk enough about it. Sorry, I don't mean to rant, but I've literally been watching Berkshire annual meetings, and the fact that insurance has been such a big topic for that made me dive in, and that's really why I want to be focused on insurance this year, because I keep watching the annual meetings, and the number one thing that keeps coming up is he keeps saying the most important thing is the float and how much money they have, how much they're making on invested capital, and how much the float's helping them, and how much it's going to grow over the course of time. And that's really what I'm focused on now, is I want to buy companies with a massive amount of float, and I want my portfolio to be more more ingrained with insurance, and so that's why I'm so bullish on it now. So honestly, when it comes to like where the positions are going to be sitting, when it comes to overall allocation, I can tell you that Allstate and Pepsi are going to be number 1 and number 2, and then FRT, and then for the second set of months, it's going to be Procter and Gamble first, and then AT&T, and then General Dynamics. And then for the third set of months, it's going to go Aflac, then Travelers, then McDonald's, and then Black Hills. So I have an idea of where I want the positions to be at, but I can tell you that insurance is going to be a huge one. So with that being said, guys, I just want to say thank you so much for watching. We're so close to 500 subscribers. We're at like 480 plus, I think. I don't really like to pay attention to the numbers, but it's just crazy to me that I have 400 subscribers. It's just insane. So I just want to say thank you so much for everybody who's been, sending me DMs on Instagram and, contacting me and stuff like that, commenting on videos and liking them. Really, it's phenomenal. So thank you so much for the support, guys. It really means a lot. So tomorrow I'll have a video of me buying the stocks with the cash that I have left over, and my guesstimations are probably off for how much I had because I did it at different prices, so I might be able to buy more than what I thought. I'll let you know when I make the video because you guys will see it. So I sold stocks today. That's what the 552 is from the sales, and then I'll have a dividend come in from Altria, and then the dividend and the buying power will be, of course, mixed. So I'll have like $680, and then before I go to work tomorrow, I'll record a video of me buying the stocks, and then I'll do my regular portfolio update as well. So you guys are going to get 2 videos from me today and 2 videos from me tomorrow. So excited about that. So insurance and real estate, here we come for the year. 2021 is going to be phenomenal, and I'll just keep on watching Berkshire annual meetings and keep investing and, keep the videos coming. So thank you guys so much for watching. Thanks for all the support. I'll see you tomorrow with another Robinhood portfolio update. Take care, guys.